In this video, I'm going to show you how versatile this trading strategy is. I'm going to run through a series of trades that I took to show you how you can use this strategy to swing or to day trade. Let's get started. So as you can see at the moment, we are on EU on the daily time frame. So this is the time frame I use to swing trade. So as you can see, on the daily time frame, we've basically swept liquidity with this move here. So let's mark out the liquidity sweep. I'll mark out the highest point. This is the one that we'll be looking at. That's our liquidity sweep. And now, as you can see, we've swept liquidity and prices started retracing back down. So at this point, you can see that price went down and then up and then down again, giving us this break of structure here. And when trading the daily time frame, I always look at the current range. So I wouldn't look at it from up here. I would look at it from up there to down here. This would be our current range. So we've got our liquidity sweep. We've got our break of structure here. And as you can see, we've got our fair value gaps there and here again. So now we can actually draw the fib to find our 75%. So as this is a bearish range, we'll draw it from the top to the bottom. Let me just extend these levels out so you can see them. That's it. And just to clean it up, I'm just going to remove these fair value gaps. And now what you could do is locate the order block. And in the bearish scenario, the order block will be the last bullish candle before that impulsive move. So this is our order block. So now what I can do is I can now frame my trade. So I'll take this here and I'll place it right on the 75%. That's where we're entering from. I'd stop loss at the high of this range. And I'll take profit at the bottom, which gives us roughly the 3R. As you can see, I'm on FX replay, so I'm actually going to place this trade. And as you can see, I'm risking 1,000 to make just under 3,000. Let's just put that through. Okay. So now we've got our swing trade ready. Now we'll move on to the hourly time frame, where I'll be showing you how to day trade from the hourly time frame. So now that we know we're anticipating price to go into this zone, we can actually buy whenever price gives us an order block formation going up. So all we need to look out for is for order block patterns. So let's just play price forward and see what happens. We haven't really had an impulsive move as of yet. Okay, so I can see price is attempting to retrace down. So let's have a look what we've got here. So I can see that at this point here, it was impulsive move, but there were too many wicks where price kept going down. Don't really like that kind of price action, but we did get a liquidity sweep here, and we did get our break of structure at the top here. And we've got fair value gap here, and we can locate the order block, which would be this big candle here. All honesty, looking at this whole pattern, it's not something I would take. So the order block is a bit too big, and the way the price moved on this range was not convincing for me to take the trade. So I'm actually going to leave this one out and wait for the next one. Okay, let me play price forward and see what happened. Okay, we still haven't got an impulsive move after a liquidity sweep. So we've got this move here, but there's no liquidity sweep and there's no structure that's been built for me to actually say, yeah, we broke structure. There's nothing here. So let's play price forward and see what happens. Okay, so yeah, price is attempting to go up, but it's really struggling. Let's see if we get anything. Okay, we can see price is retracing. So let's see if we actually got an entry here. So first thing is a liquidity sweep. Did it sweep any liquidity here? So we've got this wick here, however, it didn't sweep anything here. All it did, it went down to cover this fair value gap. So we actually don't even have a liquidity sweep. Although we've got this impulsive move, I wouldn't take this trade. Let's play price forward and see if we get another opportunity. Okay, yeah, I like this move now. Let me just zoom in so we can look at this move. Okay, if we look at this structure point here, we can see that we consolidated a bit here. Then we went down, sweeping this liquidity here. So I'll just label that my liquidity sweep. And what happened after that? Price broke structure at this point here. So we can label this our break of structure. And as you can see, there's so many fair value gaps in here. There's one here, then there's one there. Actually, there's just two fair value gaps. So one here and one there. So now I can draw the Fibonacci tool. So I'll draw it from the bottom to the top. Let me just extend this out so you can see it. Okay, and I will draw our order block here. So as you can see, this move here, swept liquidity, broke structure. We had this impulsive move to the upside. This is definitely an opportunity that I would enter. So what I'll do is I will enter at the 75%, which is there, put my stop loss at the bottom, my take profit at the top, and that will give me 3R. So now this is the second trade we're going to place. This one is off the 1 hour. Same thing again, risking the same amount, 1% to make 3,000 back. So let's save that and let's play price forward to see what happens. Okay, we've been tapped in and straight away, look at that impulsive move. This is definitely indicating that that was a smart money order block. Let's play price forward and see what happened. Ooh, yeah, I thought the TP had been hit there, but not yet. Yeah, I'm not sure why that didn't tap us out. So the high is 14. This high is 15. Okay, we're literally a pip away from getting tagged, but let's see what happens. There we go. So that's our first trade. I'll just drag this here so it's out of the way. So that's our first trade done and we're up 3%. So we've made £3,000 there. And then now let's just go back onto the daily time frame and see where we're at. So on the daily time frame, you can see we're gradually going up. And what we're anticipating, that price is going to tap into this order block and melt back down. So let's go back to the 1 hour and continue day trading, knowing that our bias is to buy until we get to this point. Once we tap into the order block, our bias changes and we start selling from that point. So let's see what happens. Okay, so now we've been triggered into the daily opportunity. So now, as you can see, we've tapped into that daily area of interest and straight away price is melting down. So from this point onwards, all I'm looking for are sales. Let's play price forward and see what happens. Okay, yeah, I like this move here. So what can we see? We swept this liquidity here. So I'll just label that my liquidity sweep. You can see we had this impulsive move with a fair value gap just here. We actually broke this structure point here to confirm that we're definitely going down. So this is our breaker structure. So from here, you can draw the fib from this high to this low. I'm just going to drag it out so we can actually see it. And obviously, I'm going to mark out our order block. As this is a sell opportunity, the order block will be the last up candle. So here's our order block here. You can see that this order block is quite big, but it's still within the 75%, and that's all I want to see. So let's now enter off that 75% zone and put our stop loss at the high and our take profit at the low. So that's 3R. Let me place this trade. Again, we're risking 1,000 to make 3,000 back. Let's save. Okay, let's play price forward and see what happens. Straight away, we've been tapped in. Okay, that was a nice quick one. So we got tapped in straight away. It hit our take profit. So that's our second trade done. So now if we look at our balance, we're actually up 6,000. However, we've got unrealized profits of 1.2, which is from that daily entry. So let me just make space and then let's see if we get another opportunity. And from this point, all we're looking for is for sales. So we're looking for an order block pattern to the downside. Okay, we haven't had an opportunity to the downside. Okay, yep, I like this. Price has definitely swept liquidity at this point. So let's see, is price gonna start retracing back? Oh yes. So let's look at this opportunity here. So we've swept this liquidity here. And then we had this impulsive move to the downside, breaking past this structure point here. Just label that our break of structure. And again, we've got fair value gap here and we've got one here. I'm not going to mark them out just because I just want to keep the charts clean. What I'll do is I'll mark out our order block, which is this one here. And we'll draw out the fib from this high, this low, and we will extend that out. So now can place our sell. So what we'll do is we'll enter off this 75%, our stop loss at the high, our take profit at the low, and that gives us a consistent 3R. Let me just lock this trade, and again we're risking 1,000 to make 3,000. All right, so let's play price forward and see what happens. Okay, so as you can see, we've been tapped in. So now this is our third trade and we've still got the daily trade running. So now let's play price forward and see what happens. Ooh, okay. So as you can see, we've actually lost this trade. So price actually came back after tagging us in, kind of like consolidated around this area before just going and hitting our stop loss. This happens in trading. So that's one trade we've lost. So now our profit is down to 5,000. Because remember, we'd won 2 trades and our profit was 6,000. We're risking 1,000 on each trade. So now we're down to 5,000. Okay, is what it is. Let's continue playing price forward to see if we have any more bearish opportunities. And the bias doesn't change because we lost the trade. It's still the same. We're anticipating price to go down. Okay, I like this opportunity. So as you can see, we swept liquidity at this point here. So I'll just label that our liquidity sweep. And then we broke structure at this point here. So this is our break of structure. And as you can see, there's fair value gaps within the range. So we've got one here and we've got one here. And again, our order block would be that last up candle before the impulsive move. So this is our order block here. Now we add the Fibonacci tool to see if the order block is within that extreme zone. And as you can see, we are in that extreme zone and we've got all our confluences. So this is a trade to definitely enter. And as you can see, we almost tapped out of the daily trade. Once we tap out of the daily trade, that's it. We have to wait and see what price does before we decide what our next bias would be. However, with this opportunity, I'll set this up. So let's enter at that 75%. Our stop loss at the high and our take profit at the low. Let's place this trade. So again, we're risking 1,000 to make 3,000. Well, just under 3,000 on this one, but that's still okay. Let's just save it. So let's play price forward and see what happens. Okay, yeah, we've been tapped in. It was an impulsive move, but my bias is we're going down, so I won't worry about that. Let's play price forward and see what happens. There we go. We're going down. But we're still playing around our entry. Okay, there we go. Okay, that's TP hit on this trade. So we're back up to 7,000. Well, should be 8,000. And again, we've still got our daily trade here going. I think at this moment it's probably going to hit TP as well. Let's just play price forward. Okay, so that's all the trades done. Let's just have a recap to see what happened. So we entered this trade on the daily, tapped us in on the 1st of October, and by the 8th of October, we hit our take profit. So that's about 7 days. So that's how long swing trades would take. And let's look at the opportunities we had on the 1 hour. So we had this first one here, which netted us our first 3R. And then price went and tapped into the daily opportunity and gave us this move away from it, which left an order block, and we entered off there, getting our second trade. And then we had this impulsive move. However, price came in and basically whipped us out, just literally by a pip. These things do happen. This shouldn't make us change our bias or anything. And then we had this third trade, well, fourth trade, including the daily, where price gave us this impulsive move, tapped us in here and went straight to the downside, and also taking us out of the daily trade. If we look at these trades here, so I think this one went up to there before it took us out. So let's see how long it actually took. So took us in at 2 p.m. on the 30th of September, and by 6 a.m. So you'd have had to let this one run, but it should have taken us out at this point. I'm not sure. It missed us by a pip, really, but all depending on what broker you're using, you'd have been out in the trade within 2 hours. But like I said, with my strategy, I set and forget. So it's either going to be TP or stop loss. But luckily, this hit our TP, left it running overnight, and it hit our TP. And then we had this other opportunity again, where price gave us this order block pattern here, and at 1 p.m. on the 1st of October, that's when it tapped us in, and by 5 p.m. we were out of the trade. So that basically took about, 4 hours. And again, as you can see, every time I'm entering these trades is actually during my trading hours. If I'm trading off the 1 hour, I'm trading between 8 a.m. till about 4 p.m. UK time. So this first one was at 2 p.m. This one here was at 1 p.m. And then let's look at this one here. So this one was on Friday. We had another opportunity, and at 9 a.m. we got tapped in. However, this one hit our stop loss. So at 3, as you can see, price was just consolidating within its zone. And then again, we had this opportunity here and entered the trade at 3 p.m. on the 6th of October. So from here, we can see that price was consolidating until it gave us the impulsive move to the downside. So this is now on the next day, which is when price hit our take profit at 8 p.m. So again, set and forget. We don't change anything. Say the stop loss or TP. This time it was TP. And on the next day at 2 a.m., our daily trade had tapped us out. Before we look at the stats in FX Replay, I just wanted to talk about how this trading strategy is versatile. You can use it to swing trade, day trade, or even for scalping. Swing trades typically last anywhere from a few days to several weeks, since you're taking trades on the daily time frame. This style of trading is a great option for people who work full-time or have busy schedules, where you can't analyze the charts every day, but you have a specific day, maybe once or twice a week, to analyze the charts and set your positions. Then you have day trading. Day traders open and close positions within the same trading day. Although some positions may occasionally be held overnight, day trades can last anywhere from several hours to a full day. This style of trading is also great for people with a 9-to-5. You can find your positions on an hourly time frame before work, or if you can dedicate a quick break between each session to find your positions, that would be great. You also have another trading style called scalping. I didn't cover any trade example of this, but you can find videos about it like the one on the screen now, where I actually explain my whole strategy and give you an example on the 5 minutes time frame, which is my scalping time frame. However, scalping is more fast-paced trading. So when you enter a scalp trade, you're entering and exiting trades within seconds or minutes. Sometimes they could even last a few hours, depending on market movement. But this style requires a lot of attention during trading hours because you're looking to take advantage of short-term price movements. It requires intense focus, quick decision making, and constant market monitoring. I personally like to day trade and scalp. You will notice that most of my trade examples that I share are on the hourly or 5 minutes time frame. I use the hourly time frame for day trading and the 5 minutes for scalping. You can also use other time frames with this strategy as long as they align. I'll speak more about time frame alignment in another video. However, I personally think that if you have a job, swing and day trading are better suited for you. But at the end of the day, there's no best trading style. Pick the style that fits your schedule, personality, and goals. Whether you're swing trading, day trading, or a scalper, consistency and risk are what matter most. Okay, let's look at the stats of that session we just had on FX Replay. So at the moment, I'm on the sessions tab, and you can see we are in that EU session that we just did. From here, we can go back to the charts, and you can actually put a description of the session itself. You've got things here like the equity curve. You can see how our one is consistently going up, your monthly performance, and your daily performance. So you can actually see what days you actually perform better. On this one, it was Wednesdays and Tuesdays. And at the bottom here, you can actually see each trade. But let's actually go to the analytics where we can actually see more details about that session. So in here, you can see we have that same information, our P&L, our account balance, our win rate, the number of trades we took. And then you can see the 4 stands for the 4 we won, and the 1 would be the one that we lost. And we've got our break-even trades. We have 0. Like I said, with my strategy, I set and forget. And yeah, so other stats we've got here, you've got your average RR, as you can see, should be 3.3 because I always just go for the 3R on all my trades. But yeah, those are the stats. And here we've got the expectancy, profit factor. Some of these stats for myself, really, I don't really look at them as much. But yeah, let's carry on. Then we've got the winners and losers. As you can see on the winners, we've got 4 trades, and then we've got the losers here. And then we've got performance by side. So this is performance by either it was a buy or sell. So within that session, so 4 of my trades were actually buys and 1 was a sell. And again, the win rate was on the buys was 100%. So all 4 trades that I bought were 100%. And again, you got performance by session. So you got the win rate, the total trades, the average RR, and the profit. And then you've got performance by time again, which is important. As you can see, all my trades were entered within my trading window. So I trade from the UK. So depending on daylight savings, it's from 7 till 4 p.m. That's when I enter trades. And then performance by day, you can see what days your strategy actually performs better. So you can see on this one, Wednesdays were pretty good for me. And Mondays and Tuesdays, I only had 1 trade, and then the loss that we had on Friday. And then you've got performance by month. So you can actually see, so if we actually ran the back testing, let's say for a whole year, it would have actually shown us each month. But however, we only ran it from the end of September into October, and these are the results we got. And then you can actually see it on the calendar. So if we actually go back to September, we've got the 1 win here on the 30th. And then if we go back, you've got the other wins in October. The main thing that I just wanted to show you is that with this backtesting tool, you get a lot of data that you can use to tweak your strategy to how you trade. The strategy stays the same, but you can tweak certain things. So if you see you aim for just 1R, and you see that when you aim for 1R, you're actually winning a lot more trades than if you aim for 3R, then maybe you should just trade using the 1R. Or you could actually see what times are best for your performance. So with the times, this will relate to the actual sessions as well. So you could actually see, okay, I'm actually more profitable if I trade the London session than the New York session. That's what's good about backtesting the strategy. So you can actually fine tune it to yourself and how you trade as well. You could just backtest trading on the 5 minutes or on the hourly or on the daily. So you can actually fine tune everything and see what actually works best for yourself. Okay, so thank you for watching this video and getting this far. If you like this video, make sure you like, subscribe, and in the description, I've got a link to my strategy if anyone wants to learn it. And yeah, I'll see you on the next one.